Hey, we had a pretty good week this past week. Let's do a recap for it. February 17th to the 21st. We had 3 stocks in play, and let's take a look at all 3 of them. First was Carvana. We opened a cover call on them. They reported earnings, and the reason we picked Carvana was, the thinking behind this was, for the market cap they had, the upside was pretty limited in my personal opinion. I thought they were going to do well, and they did do well in the report, and so given the premiums for the strike price that we sold at, which was $340, and the price was about at $289, $290, that was a lot of room, in my personal opinion, for safety and to be successful at making money off the premium. And so after earnings, they momentarily in after hours they went up, and then they went down. So it went down significantly. I guess people were looking for something where it didn't meet expectations or not, but they exceeded expectations. Okay, but maybe something like the gross profit per unit of the cars that they were selling came a little bit shy of the target, but nevertheless the report was very good, and their future is very bright in my personal opinion. So for Carvana, that was the strategy to play this volatile stock, so the premium was juicy, and to have enough gap to make sure the stock did not surge on you, so that it goes into the money, where you would lose out on the premium. So we were good for that. Next is Nvidia. Nvidia had a run up in the previous week, and then this week, they bounced, I think, from about 120-ish, if not a little bit lower than that, all the way to 140. And they're reporting earnings next week, so maybe that was the driver of the price. But they've got a few things hanging over their heads, export controls by the government, and also DeepSeek. How does that impact their business in the future? Better, could be worse, who knows? So anyways, I thought 140 was a very good price, to play, where you would expect it to go sideways for the most part, and to make money off the covered call contract. So we did make money off the contract, so that was good. And then one other play that we made was Palantir. And the reason for that was, with the government announcing budget cuts to defense, and this up stock is just like a super high flyer. It's a great stock. It makes a lot of money, but it's very expensive. It's very, very pricey stock. And so it plummeted from a high of 120, around 125 to 99-ish or so, around those numbers. And we jumped in at 101 on the bounce, and we sold 2 contracts for 105, 106, and right into Friday, they were clawing back. Looks like we were not going to make money off the premium, but we did. At the end of the day, the stock came all the way back down to 101 and change, and we pocketed the premium. So I would say it's a very successful week for us in making money off the premium, where the stock did not go into the money. So I'm pretty happy about that.
All right, here's the spreadsheet of the summary for this week. As you can see, the top is the ownership of the shares in the cover call, and definitely Carvana tanked after earnings. So if holding it for short term should matter to you, but typically cover calls, you hold it because you already have the stock, or there's for long-term benefits, then it would be in the red. It would be in red by 4,174. As for selling the premiums, we were 4 for 4, and for Palantir, Carvana, and Nvidia, and the total we racked up is $494. So, that's again my goal of these videos, to demonstrate that we can consistently make money on the premium, and we've done so this week. So if you combine the cover call for the week, you would be down minus $3,680 on paper. If you did just naked, or you only collected on the premium and you weren't really concerned about the ups and downs in the short term, such as a weekly trade here, then you would pocket that $494. All right, that's it for this week. Looking forward to talking to you next time on the next video.